In today's video, I just want to follow up the live trade that I have done on SPY for the ratio spread. And today is the 21st of March 2017. The ratio spread that I did for SPY was a set of ratio spread plus a diagonal. The ratio spread that I did for SPY was a ratio spread of buying 244 and selling 240, plus I purchased a LIPS option as a diagonal for the protection. Currently, the whole set of the SPY is making a profit of $118. And this is the risk graph of the whole trade. This whole trade requires a margin of about 2,140. If you use the current profit divide by the capital required, that is a 5.5% return over 19 days, not even a month. This is a very good return for this ratio spread or for this trade itself. We have achieved a 5.5% in less than 20 days. I will take this trade anytime. But let's zoom in on the trade itself. If I were to just do the ratio spread alone, the trade would have turned out well at $124 or $126 profit. The trade would be fine by itself. But remember, when I did this ratio spread, the market is at 240. And my concern was on the downside, not on the upside, because on the upside, if the market go up, if you do a ratio spread, that is fine. But the concern was on the downside when I initiate this ratio spread. Because I was concerned with the downside, so I opened a long put option that expire in January 2019, 2 years from now. When I open this long LIPS, then I have a upside. If the market go up too much, I'll be losing money. But on the downside, I have extended the break even to be pretty wide, which I'm comfortable at that point of time. If the market were to go up, then I would have to close out the ratio spread and readjust the trade. And if the market were to go down, I can choose to take the profit, or I can choose to roll. I'm going to close out this spread, but I can always turn this trade into something else. I can just close out the ratio spread and I'll be left with a long-term LIPS put that I purchased. And I can do another ratio spread, or I can do a diagonal by just selling a short-term spread and continue on with my LIPS put that I purchased. Option trading is to be creative and not to stick to just one trading strategy. We need to move with the market and be dynamic with the market. And I'll just close out this ratio spread now. Create closing order. And we have to make sure it's correct. We buy a 244 put and sell 240 put. To close out, we need to be selling off the 244 put and buying 2 of the 240 put to close out. And we can check the mid is 38. The net is 0.4. The spread is pretty wide. If the spread is pretty wide, then we may have to close out individually. Let me take a look at the strike of itself. Yes, we have a pretty wide bid-ask spread. So I will have to close out this manually. I may get a better execution price. And for this spread, I would be making about $100. When we close out this kind of spread, we always want to close out the sell leg first. Because if you close out the buy leg, then you run into a naked position with the sell leg, and your margin may increase. Of course, if you have more than enough margin, then you can close out either side. But it is always a good practice to close out the sell leg, because the sell leg is the one that will give you a problem if the market suddenly move down. Okay, I'm going to close out my sell leg first. To close out the sell leg, I will have to buy 2 contract. Buying 2 contract, 352 and 355 is the net price. I will try to queue in between. Probably 354, I should be able to get it. Confirm and send. Make sure it's correct. Buying 2 to close out the sell leg first. I will have to pay $708 plus $2 in commission, $710. And I don't think I will be able to get it because the price has just moved. So I'm going to switch it to 355 or 356. Confirm and send. Send. And the order is here. If it is still not done, I will just switch it. Okay, it won't be done because the market has moved. So I'll change it to 361. Confirm and send. Send. So I'm filled at 359. And now to close out my buy leg, I'll be selling the 244. But the 244 has a pretty wide spread, so I may have to take some time to queue to sell it. Let me try 760. Make sure it's correct. Credit of 760 minus $1. It is not done, but we can see that the order has changed to 740 and 760. So let me try to lower a little bit. Cancel and replace because it's not done. I just want to see the bid and ask. And there's 26 lot on the ask side. $745. There's 1 lot, so that is mine, and I'll just wait for a while for this order to be filled. Just for this class, because I want the order to be filled. So I have to change it to the 740. And I'm done at 740. Now my position is square off. I'm left with this 240 long-term leads put. I can close this out, or I can choose to do other trade, which I'm planning to do other trade, so I won't be closing this trade out. But I just want to recap. We are paying about $359, and we are paying 2 contract, which is about $7.18. And when we sell this contract, we are selling for $7.40. So our profit is actually 20 over cent. That's not true. Remember when I did this trade on the 2nd of March, I actually received a credit to open up a ratio spread. If you go back and view the video, you can see that I actually put in the ratio spread for a credit. And now I'm taking off the ratio spread. Again, I take off for a credit. Think about it. When you initiate the trade, you receive a credit. And when you take off the trade, you receive a credit again. And this is the beauty of a ratio spread. If you are unclear, just watch back the previous video when I initiated the live trade. And if you still have any question, just drop me a message. Thank you.